Hello, today is April 15th, 2022. It's Good Friday, and it's time for some new stock picks. As always, we'll review the picks from this time last year and then move on to some new ideas. So this time last year, our top three stock picks were Union Bank shares, UNB, and that stock returned 5.2%, including dividends, for the last year. Terranium, TX, was up 34.3%, and an ETF that holds gold, the KILO ETF, Purpose Gold Bullion Fund, which was up 11.7% in US dollars for an average of 17.1%, and that compares with 3.2% for the World MSCI World Index ETF, URTH. So going forward from here, we are at a bit of a crossroads. Inflation was higher than we wanted before Russia invaded Ukraine, and then that war erupted in late February, and since then the price of oil, wheat, other commodities has gone even higher, and this sort of inflation is hard to fight with the traditional tools of monetary policy that the central banks have, like raising rates. Supply shortages from wheat, for example, interest rate rises are not going to have much effect on. So the Fed and other central banks have no choice but to continue raising rates, as they started not too long ago. And they'll start with the reversal of the quantitative easing, which now they call it quantitative tightening, maybe in May or June, to the tune of maybe $100 billion per month. And that will remove liquidity from markets. There's an old adage in investing: don't fight the Fed. And with that in mind, that means that possibly asset prices for stocks and real estate and maybe even commodities may disinflate or possibly deflate. Likely disinflate first. So we've got to be a little bit more cautious than we have been for the last couple of years. So with that in mind, a top stock pick is a consumer diversified defensive play, Unilever. Boring, large cap company. They have whole brands like Knorr soups, sauces, Hellmann's, Lipton teas, Axe, skin products, Dove, stuff like that. It's going to be a boring pick. Don't expect a big return from it going forward, but a good stable return. If we can hit double digits for the next 12 months, it's not so bad, given the alternatives. So that's stock pick number one. And for those that don't mind investing in tobacco stocks, I personally don't, but if you don't mind investing in tobacco stocks, British American Tobacco, the owner of the former Philip Morris and so on, is even cheaper than Unilever and should be recession proof. But it's either or for most investors. Next pick is a U.S. insurance company called Cincinnati Financial. Their property casualty insurance company, including automotive insurance. The insurance companies that have shorter-term liabilities, such as automotive, invest their premiums in shorter-term investments, and with rates going up, they'll be able to get a higher yield on their premiums invested. So just by that fact alone, such companies should do better. But this one has the typical characteristics of companies that I look for in investing: highly profitable, strong balance sheet, good valuation. So this should be a good long-term hold. And a third one, this is more cyclical, and more the opposite of a defensive stock like the first one was. LyondellBasell Industries, symbol LYB, petrochemical producer, US and Europe. With the economy being hot as it is right now, if things don't deteriorate as much as everybody's expecting, companies like these should continue to do well. And this one in particular is highly profitable again, has a strong balance sheet, and the valuation is good. So it's a good idea to have some exposure to cyclicals as well. While inflation is still high, and we can participate and hedge against that. If you have any questions regarding how these ideas, these picks fit in your already hopefully diversified portfolio, give us a call. Thank you.